goodness a gravy, folks. Is that what people say? It's what I just said. Tesla down pretty big here after hours, after reporting earnings. We're talking about an $11 movement down, pretty significant. About 4.7%. That's on top of a daily performance already down 4.7%. So we're talking in total on the day, the stock moved down pretty significantly. Just about $23.50. That's a significant move, if you ask me, for one day's time. So went down just because the market as a whole went down today, and then after hours with earnings, it went down as well. Initial reaction was positive, so we'll take a look at that. Let's take a peek at these earnings and see why this thing has retreated quite a bit. Now, one thing I always say when looking at earnings, we have to look at the yearly performance, and it's got to be noted Tesla's still up massively on the year. We're talking year to date up 124%. That's pretty significant. Obviously, close to 110% here after this, you know, this move after hours. So worth noting. But 1 year out though, we look at that and it's a little more bleak, right? Only about $10 up in the last year total. But year to date had the peak in January, and shoot, if you would have bought back then, whoo, you would have been loving life. Anyways, let's get into these earnings. The roof of my mouth is itchy. Don't know what's a solution for that, but it's itchy. Can't really scratch it. Guess with my tongue maybe. Shoot, use some of my tongue skills, and they're pretty effective. The tongue's pretty effective, let me tell you. Um, so here we go. Here's the headline, and you look at it, yeah, that's not good. This is a company that, with the performance of the stock the way it's been, you're gonna need, and the multiple it trades at, the only way you really survive earnings and go up from them is a beat on both ends. And I look at this and I see a miss on both sides, not only an EPS miss, so profit missed, and just overall revenue missed too. So definitely some concerns when you see that. We'll get into some further details, obviously. So just the headlines. Um, Non-GAAP EPS of 66 cents. Uh, Consensus here was going to be 74 cents, or 73 cents, I should say. And they missed that target. And then from a revenue perspective, 23.35 billion. It is an increase around 9% a year, but they were expecting higher than that. Missed by about 790 million, which is it's a significant miss. Obviously, I mean, that equates to, just if we equate that out, let's just say it equates to, um, I guess not really much. Only about 0.5% of their earnings, but still, that's not insignificant. Oh, sorry, I should say 5%. I mean, about four, maybe let's say 4% of their earnings are, if we did the math, probably closer to 3.5. Actually, now that I imagine it. But anyways, that's about 3.5% of their revenue potentially that was missed. Is what I'm trying to get at here. The bad math was struggling, and I apologize. CapEx spending is exactly where we see this line come from. A lot of CapEx spend here, 2.46 billion versus the second quarter, last quarter of 2.06. So definitely a lot more spent this quarter. 400 billion more spent, or 400 million more, I should say. Free cash flow down by about 150 million from the previous quarter. That's pretty significant too. But again, a lot of that we can just stem here from this CapEx spend. More money spent this quarter. So getting a little further, one of these headlines. Then we'll get into the slides. So they generated during the quarter $1.9 billion of GAAP net income, which is obviously pretty significant, right? You talk about just a couple of years ago, this is a company that wasn't generating any GAAP net income, right? They weren't making any money. But here they are making $1.9 billion. That is definitely still pretty significant, even though it didn't necessarily meet their targets. Still good, still worth noting, right? So they're going to talk about production here. They produced 430,000 vehicles and delivered 435,000 during the quarter. That makes a sequential decline And they're saying this is due to planned downtimes for factory upgrades. This includes obviously the Austin factory. We're talking about rolling out the Cybertruck. Um, I think there were some upgrades in Shanghai as well. So they're kind of equating that. They've got a reason for it at least, which falls in line with a capex spend. Upgrading the facilities to handle the production of these newer models of vehicles, so on and so forth. So during quarter two, they delivered 466,000, which the estimate was 445,000. So about 35,000 more 30,000 vehicles more delivered last quarter than this one. So it's not insignificant at all. And they also produced 479,000 during that time, which is about 40,000 more than this quarter. So it all kind of adds up. The story, they're not just BSing you, I don't believe. Not at all. And in the first quarter, they delivered 422,000, so less than this quarter, and they produced 10,000 more roughly. So not too bad at all. Now, they still do expect full year deliveries of 1.8 million vehicles. Now, obviously, that gives you a good idea what the guidance looks like for Q4. Um, because so far, when you equate that out, they've delivered, let's say, it's right around 1.3 billion vehicles. What? 1.3 million vehicles? That would be wild if they did billion. So they'll have to do roughly around 500 million in Q4 to actually meet their goals, and it's definitely a possibility, right? It's not like it's impossible for them, but it's going to be a challenge. It's an uphill battle with this quarter being a little down, and I'm presuming they're saying, with Cybertruck rolling out, and I think they believe they'll be able to to make that happen. So operating margin came in at 7.6% of sales, to fall from last quarter's 9.6 and 17.2 of a year ago. And they're saying this is due to reduced average selling price, which is that in turn was due to the mix of vehicles sold and pricing, which it is noteworthy that pricing has decreased on basically every model, globally, in this last couple of months here as well. I know in China they announced a pretty decent price cut a couple months back, and now obviously in the U.S. we see some of these going a little cheaper as well. So that's obviously going to hurt from an operating margin standpoint, just because they're spending just as much to produce the vehicles and just charging less to to sell them. So makes sense. That's going to be natural. So nothing shocking there. So the CFO, Zachary Kirkhorn, sorry, Kirkhorn, what is that? That gross margin should remain above 20% with average selling prices in the high range of 40K. But yeah, that unfortunately didn't happen. Because they cut prices here the last quarter. So yeah, that's all right though. That's okay. Solar deployed fell, which is noteworthy. They're gonna have a whole slide on that, and we'll get into that. Don't know if I even need the slide with all these freaking beautiful. It's actually um, a great W by Seeking Alpha. Normally, they don't necessarily hit us up with these great ones, but Tesla stands planning to grow production as quickly as possible in line with the 50% compound annualized growth rate target the company began guiding in early 2021. Obviously, definitely a decent ways out of that. They say in some years they may grow faster, in some years they may grow slower, depending on a number of factors, which just makes sense. But overall, they're planning on hitting that target, 50%, for the time to come. So so the Cybertruck remains on track, is what they're saying. First delivery is scheduled November 30th at the Gigafactory in Texas. And the production of Tesla's high density 4680 cell, 4680 cell, it's progressing as planned. So they don't have anything necessarily negative here to say that they're like delaying projects or anything. Obviously, the Cybertruck's going to be, it should be pretty big here for them. Not really an electric truck player out there necessarily. We've got Ford, but I've seen some pretty bad reviews on the Ford F-150 electric. Just not that reliable, and there's plenty of issues associated with it. So hey, if Tesla's able to pull it off, even though it's a a bit of an uglier vehicle, um, there's Rivian obviously there too. But they could be a main player in the electric truck game, obviously, since they know the brand Tesla, they know it well, um, and that's all they make. So less chance of things to go wrong potentially. I don't know. So let's get into the slides. Just to take a look here. Look at this. So just basic, these slides. Let me tell you. I guess we could center that just a little more. Oh yeah, that's centered as freak. A lot of this already stated here. We looked at that gap net income, which does make me pretty excited actually. Um, I do like to see it. This talks about the oh, sorry. That's terrible of me. It's terrible of me. Automotive revenues. I'm dying out here. What happened to me? And this gives a better picture because you can see not only the year over year, but quarter by quarter, kind of see where we're going there. Um, from an energy perspective, year two, you look at solar, not a massive piece of their business necessarily. I mean, it equates to, again, we look at it, only equates to about, I mean, 9%, I suppose, or sorry, that's just inaccurate. I guess closer to 6% of their. Actually, that's actually right at 1% now that I think about it. So, um, what is wrong with me? I can't figure it out. It's 5%. It equates to 5% of their business. That's what I'm trying to say here. Anyways, 40% growth year over year, pretty significant there. You saw profit slip with revenues increasing, and that's 22% is it's not an insignificant slip there for sure. So that's a concerning piece of it. I'm definitely not too excited about that if I were a shareholder. You'd hope that they kind of keep to what they're doing as far as their profitability path line, but expenses do come in the way, and obviously vehicle pricing decreases here too. Um, so, here's another production chart. Don't really need to necessarily go into the breakdown here because it's nothing crazy. I mean, we know what it is. They've only got a couple of models that they produce. It's basically all the Model 3 at this point, just carrying. And that's why having the Cybertruck there would be a significant thing for them. And you see the Model S and just basically doesn't exist. It's all about Model 3 now. 29% growth there, so pretty nice. So. 27% overall delivery growth it's significant for sure. Solar deployed is down about 48%, but solar storage, which is pretty important, up about 90%, which is a lot more significant in my opinion. So not too bad. Tesla locations increased 25%, which is definitely important. Mobile fleet increased 20%. Here's the big thing for me, the supercharging stations. This is where they get a big competitive advantage, where a lot of these companies don't necessarily have, um, they don't have charging stations, and they're having to partner with Tesla on these. So 31% increase is great there. Helps them just open the door for more partnerships and pathways to, increase revenue as well. Let me shrink this down a little so you can get a bigger picture. There we go. I mean, really, it's a smaller picture, but you get to see more of it, I guess I should say. You don't need my taskbar. Get that out of here. Here they go into a little bit about, the factories, what they're doing. So nothing crazy. Everything, pilot production. Obviously, they've got the Nevada facility in the work for the Tesla Semi, which could be significant as well. And the Roadster, nobody knows what's going on with that. That's still a mystery. Still a mystery to me. Still a mystery to everybody. So, nothing crazy on these really that I wanted to highlight. I do want to probably, starting price. Oh, this is a weird little, I didn't realize this existed, but that's kind of cool. They normally don't have that in their slides. They're going to talk about, here's pictures of the factories. They do this for a hot minute. But here's what I wanted to do. Obviously, they'll show this revenue growth. You can see the trend, right? It's not necessarily keeping at the 50% that they're looking for, but it's hovering there. Okay, it's harder. I mean, 50% off of $20 billion is different than 50% off of $5 billion. That's all I'll say. It's a larger dollar amount. What I did want to pull up here is the balance sheet because we love pulling up the balance sheet. I'm about to pull up that balance sheet. I've been feeling balance sheets. Yeah, you got them assets. So $93 billion of total assets on this company. How does that compare to the liabilities? Well, let's just see. They increased, quarter over quarter, significantly year over year, about $20 billion more in assets. From a liability standpoint, not nearly as much of growth there. 39 billion of liabilities versus 33 of the year ago. That's significant improvement there, right? From a shareholder equity standpoint, which is what we always look at next. I love looking at shareholder equity. Not a line they highlight, but I love it. I'll highlight it for you. $53 billion of shareholder equity. I don't know why they don't highlight this more. I think, to me, that's what I like a lot. It shows me a great ratio of where they are from an assets to a liabilities perspective, how much more they've got, more of the other. In this case, they've, you know, got over 2.5 times the assets that they do liabilities. Sorry, a little bit less than 2.5, I should say, which is significant. I like seeing that. What do I feel about the stock? Look, I'll say it all the time with Tesla. It's trading at a ridiculous multiple, and it's just something it does because it's really disassociated with the normal auto industry, which doesn't trade at multiples like this. They never do. They trade at generally pretty standard multiples, around 20 PE, right around there. I mean, they trade at normal multiples. Tesla, on the other hand, is a different story. It's a different beast. It trades whatever it wants to do. There's also a lot of Elon factor, I'd like to call it. What he's doing will have an impact, and what he says will have an impact on the stock price as well. So, and it's got a bit of a meme following. So, for that reason, it's just different. Not one that I necessarily mess with too much. I think it's a great stock to trade in and out of for sure. I think overall long-term hold is probably a decent idea too, just because the company's they're going to be the leader in electric vehicles. But it's just it's a tough one to predict short term. If you're trading in and out of it, you might be successful, but hey, I kind of keep out of it for now, just because of all the factors that go into it. That's what I got for you though, folks, and I hope you have a great one. Thank you.